Welcome back to another case study. I know what you're thinking. Does this guy have one outfit? No, I've been recording these nonstop. Anyways, here's a NFP case study. So, as we know, yesterday was the day before NFP, which I forgot to talk about. I'm not gonna re-record it, but yesterday was the day before NFP. You can kind of go back now if you want to rewatch over. Now that you know it's the day before NFP. Basically, I'm a developing student. These are just my interpretation on price. Big thanks to ICT. Let's get straight into it. As we can see, we're now coming back down to this daily imbalance. If we wanted to displace higher, this possibly could be an area which we reverse. We now have a doji candle, indecisive candle within the market. So that could frame a possible reversal. We know that we are taking liquidity here on the lower time frame, and then we could see some form of displacement higher. And NFP kind of is going to do that. And just note, what are we doing here on Dow? Dow, we have an SMT formed within Dow and Nasdaq. This line is the same day. Notice how ES and NQ have both taken these lows significantly, and Dow is kind of holding here. We end up trading within this down close candle. This might be a lower time frame order block that we're trading into, and we could possibly see maybe some more expansion higher, or we might just want to see what the lower time frames indicate. But right now we've traded into this lower imbalance here, maybe equilibrium of this price leg. I never mapped that out, but it looks like around equilibrium. And we could see maybe if we want to see an expansion higher within the upcoming days, we'll see. But here is the E-mini S&P. I don't know why I say it like that, but here we have E-mini S&P. And we come back down into the closure of this imbalance here, and look at the respect off of that. We pretty much fulfill that to the tick right there, and then we end up closing above that. So in my eyes, in my opinion, that is a pretty bullish signature on ES. That's a pretty bullish signature on ES, in my opinion. All right, and here we have NFP, good old NFP. As we see, even on NFP, pretty nice delivery. I know ICT does not like to trade on NFP and doesn't really like to trade on NFP, but most of the NFPs that I have back tested have been pretty nice price action, which I guess I'll still probably will never trade on NFP until I've built my own conviction. But as we can see here, pretty nice delivery. We end up sweeping sell stops here. We have all this low resistance liquidity within the market. We end up having a nice big down close candle here, nice beefy down close candle. We end up changing state delivery here, and we end up repricing towards buy side to this imbalance here. We have short term buy side here, probably short term buy side here, and then we end up going straight to that imbalance. And then after we hit that imbalance, we end up coming back down and maybe creating a possible sell model within the market. As we can see here, we end up trading back down to that order block on NASDAQ, and then the fair value gap on NASDAQ. So ES actually quite never traded back to that imbalance or to that order block, but on NASDAQ, we end up doing that very nicely. We end up trading that fair value gap and into that order block. As we can see, we have high probability liquidity within the market because we have engineered highs right above that imbalance. So we never traded into that balance that got left as a breakaway, and we left failure swings right above it. So we know, like I was saying yesterday, that within that market maker sell model, if you watched that one yesterday, we're likely just generating liquidity for the next day. And that's exactly what ends up happening. We have low resistance liquidity signature. All right, and here is a 5-minute chart. We have taken sell side here, we price lower, and we immediately retrace higher. We end up having fair value gap in, fair value gap out. This fair value gap is going to be a lot more sensitive because it has a fair value gap that has manipulated into that liquidity. So here, this fair value gap becomes a lot sensitive. We end up retrading higher, come back down to this fair value gap here, and we end up repricing higher towards buy side here. All right, and here is a 1-minute chart. Here's the 9:30 opening price, and here's the 8:30 opening price. Obviously, we're manipulating below that 8:30 opening price. We end up having the NFP. And then here we have a 1-minute change state delivery. We end up reclaiming that order block right here, just pricing higher and kind of just slower delivery until market open. And then market open, we never really get manipulation. We never really get a Judas swing within the market because it doesn't really make sense. We don't really need to have a manipulation because that manipulation occurred at 8:30. So it's kind of something that I'm going to go over into later NFP case studies. And I might just have like a playlist of NFP case studies, and I might have some playlist of like just FOMC case studies. I feel like that would be pretty beneficial. That'd be pretty cool. And like maybe like CBI case studies. I feel like that's probably what I'm going to end up doing in the future. But as we see here, we end up having just very nice respect of even this order block right there. Look at the accumulation around that. And this is your institutional order flow entry drill on the 5-minute. and we end up repricing to that buy side right here. Overall, though, I will say that there's it's just not really as clean, and I feel like yeah, it's just something to study. Like days like these, and especially being the first year of the month, or the first month. Sorry, the first month of the year. These just it just doesn't really make sense to force it, in my opinion. I'd rather wait for high probability, and if that means just taking a day off, if that means just chilling, if that just means just stressing, then that's what I'll do. I would rather be a much pickier trader than try to force it every single day. That's just me personally. And here we have constant coaching of that wick gets respected perfectly, and here we have that imbalance marked out as well. So that's what we end up heading to. And here we can see for back up in, for back up out. We end up retracing, reclaiming that, and we end up coming back down to the sell side here. So 8:30, we end up having manipulation lower, and then we end up repricing higher to that rejection block, to that counter cushion of that wick, to that fair value gap. And then here we end up breaking down. We end up having fair value gap in, fair value gap out. This now becomes a very sensitive area, also in line with that order block. And it's also happening around a certain time of the day. It happens around 2 p.m. So this is NASDAQ. And then also we have a fair value gap in line with that, and then boom. This would be a nice sell program. This was a nice sell program. So here we have that on the 4-minute chart now. Here's that order block right there. Here's that fair value gap accumulation, and then boom, we have displacement. We break down, and then we have a breaker block right here, and then we have a fair value gap right there that we trade into. And then we offer fair value at that order block and also at that fair value gap. And notice how we engineered a low right above that area. The fact that we have engineered a low right above that area, and notice what time do we end up turning here? That 12:50 macro. We end up turning within that 12:50 macro, repricing higher, and then 2 p.m. we're gonna send us lower. All right, and here is a 1-minute chart, and here we have SMT at the highs. I don't know why I did this after. Sorry, I look messed up. But here we have SMT at the highs within the market. And here is the 1 p.m. Over here is the 1-minute chart of that 2 p.m. market maker sell model. And as you can see, this ended up being a nice fractal price. We have consolidation around this PD rate. Then we have manipulation into that order block. Look at the respect of that while taking buy side liquidity. And then we have a 1-minute change in state delivery. We trade right into that order block right there. Then we have a market structure shift right here. Then we have a breaker that gets traded into. Then we have this also is a higher time order block that we traded. Or sorry, this is an order block that we end up trading into right there. And then here we trading the breaker right into that higher time frame imbalance, accumulation, manipulation of that breaker, and then distribution lower. Notice as well, I didn't mark this out in this case study, but if you guys know, I've been talking about reclaimed order blocks. And that right there is what a reclaimed order block would be. I'm pretty sure we end up repricing right to it. And then also, this would be a reclaimed order block right there. That we end up reclaiming right there, and we have displacing lower. And then here we break down, and then we have an imbalance, and we seek sell side liquidity. And then we have ended market on closed macro. We end up closing back within that range. Here we have a 15-minute chart. We have a higher time in PD array to classify this as a market maker sell model. We're going to come into a 15-minute order block, 15-minute inversion, fair value gap in, fair value gap out. This should be a balanced price range. This should be very sensitive. And that's what is very sensitive right there. And here we have just keeping things simple, because I do think this was a very good trade and a pretty nice trade. Just if you're keeping things simple, we have a 15-minute we have a 15-minute PD array that we're trading to, which is the order block, and then we wait for a 5-minute SysD. Then we have a 5-minute order block plus a 5-minute fair value gap entry that we can use to frame to the sell side liquidity here. As we can see, it rewards around 2 to 3R. I would think that it kind of looks like it might be 3R right there. And here again is the 1-minute chart. As you see, very nice fractal in price there. And here are standard deviations as normal. And look, this is like a text. This is a very nice model. As you see, where do we reaccumulate? Where do we reaccumulate in? -1 to 1.5. Boom. We end up having our displacement lower. Where do we end up putting low at? -3. Into that 15-minute order block and that 15-minute fair value gap right there. Notice how we engineer low right before that order block. Then we come back up, we retrade in that fair value gap, and then boom, then we end up repricing lower. And then we close off that low here at the market on close. All right, and here is a market maker sell model planned out. Here you have your original consolidation. Then you have, or maybe this is probably your original consolidation here. Then you have area of accumulation, smart money reversal into a higher time repeat rate with buy side liquidity taken. That's your smart money reversal. Then you have distribution. Smart lower spy, lower sell, first stage of distribution, second stage of redistribution right there. Notice how your old areas of accumulation will become new areas of distribution. And that's what I mark out within this slide here. I notice even here within this right here, you have old areas of accumulation. We're going to become a new area of distribution right there to have one more jolt back into that 15-minute order block. And as well as yesterday, I'm denoting the time that the market maker, the buy side of the curve took compared to the sell side of the curve. It's about equal. It's about equal in time. I'm also denoting until this last candle here. So I guess if I denoted just until this low here, that could have been a better. That's probably what I should have done. But yeah, overall, on NFP, I felt like there was a pretty nice market maker sell model here. Overall, we have 8:30 news, 8:30 NFP, and it's having a manipulation lower, and then we have distribution until a certain time of the day, 11:15, 11:10 macro, and then we end up displacing lower. We end up engineering low within that 12:50 macro, and then we end up displacing higher, and then we end up. This is just to engineer liquidity, and then we have a 2 p.m. Market maker sell model that ends up taking place, ends up trading right back to that order block. I also do want to note here that the reason why I think that this model was a little bit fast because we had 5-minute fair value gaps in, so there's not really it's not like consolidation, there's not really much accumulation going on in here. This is just manipulation higher to then accumulate within here to then have your distribution within here. So that's why I think it was a little bit faster of a model, and there weren't as many entries offered within this model and informed the second stage. But overall, I thought it was a very good fractal price to study in a very nice market maker sell model. Anyways, hopefully you guys have liked these. I will continue to do these probably forever. Anyways, I will see you guys in the next one.